So whenever we're trading ICC, we're using the 12-hour time frame right now. Currently, I use the 1 hour most of the times, 1 hour, 30 minute, 15. But here I'm gonna break everything down. It's gonna be replicated on the 1 hour time frame is the same way, nothing changes. So I'm gonna start off here and then we're gonna make our way all the way to over here. And I'm gonna kind of break down everything that happens and what to look for whenever you're trading the markets. Um, so first, let's start off roughly around this area here that we have. As we can see down here, let's start here. What I normally do is I find the trend. So whatever the trend is, I'm like, okay, this is the trend. Let's say we're in this uptrend. Once again, this is the 12-hour time frame. So these are multiple days of price going up, price going up, and then there'll be a day where price does pull back. There's probably multiple pullbacks within here too as well. But let's just look at the fact that price made this high. Even though this one's not going to be the one we use, let's pay attention to the fact that price made a high and pulled back and made this level of support. Right? So we had our highest point and our lowest point. Price broke up to the upside and made a new high in the market. As it made this new high, price sold off as it's normally going to do. So one thing you have to know, whenever price moves aggressively or moves up to the highest point, there will be a point where price will start to sell off to trick the buyers to get out of their positions. Because if price is pushing up, everybody's going to be trying to get into these buys. So the market is going to move in a way where it's trying to take out as many people as possible. And that is the part where we need to pay attention to, because this can work in our ways. And I'm going to show you as this video goes on, I'm going to show you guys how to take advantage of that. So we ended up having a new high in the market, and we will expect price to buy up. All right, so we'll expect price to buy up above this resistance level, but it never came above this resistance level. What it did do was create a new low. So it ended up breaking our lowest point that we have here, which is our support. So for many people that don't know, a support is basically as far as price can go down before it starts to bounce back up. And supports, normally people buy off supports, but you can sell off of a support too as well. So don't think every time price gets to a support, buy price. Most of the times you need to focus on what's going on. If price makes a low under here, that most likely means price is getting bearish and you need to be selling when price gets to support. So price here gets to support and makes a new low. So now we have this new low that I am going to mark. We have this new low in the market and the price of that reacts to it. So same thing with the new high. This also happens with the new low. So the new low is made and created in the market. Price is going to register in. People are going to try to get in for the sales. And this is what we call an indication. An indication can only come from when price breaks a support or resistance level. And it has to be the first time of it. So this would be considered a bullish indication. So anything above here would be bullish. So anything above this black line would be bullish. And anything below here, since it broke the support level, anything below that would be bearish. So we have new lows here. Price ends up correcting itself. This is what we call the correction. The correction normally happens right after the indication is made. On the smaller time frame, you'll start to see price reject and start heading upwards. So if we're looking at these sales on the 12-hour time frame, we would have seen price for 1 to 2 days sell off. And then the next 2, 3 days, we've seen price buy up. This is normally the correction. And corrections happen because one, it is taking liquidity. So think about all the people selling at this breakout level. We tend to not trade the breakout levels because we don't want to get caught in not knowing how far price is going to go down. So people always ask me, how do I know when price is going to stop? How do I know when it's correcting? We normally won't need to guess that. We just let price play out. And all we need to worry about is what direction and how far. So now, since price did this one movement, this answers all the questions for us. How far is it going to go down? And which direction? So now, since price is giving us an indication under this level, we know it's going to go down to this point and it's going to sell to this point. So we know sales under this level. Both our answers are both our questions are answered. So then we have price pull up, correct itself, and then furthermore come to here and then start to buy up a bit. This was out of session. Session comes in right here, roughly around this time, and we have price pushing down to this level, right? So now we have a new low in the markets. I normally, whenever I mark up my charts, I normally go off the body candle, like the body closes, because I feel like whenever price closes at a certain point, it's telling me, hey, I'm stopping here and I'm not going any further down than what I am, or I'm not going any further up. So I normally, if anything, if you need help, just kind of turn these off and just mark up your charts just like this, if that helps you anymore. But let's continue. So we have a new low in the markets, letting us know price is bearish under these levels of support. We have a correction because once again, a correction is only to grab liquidity. So if it makes sense to you, say correction is liquidity. So correction is liquidity. And just think of that every single time. Or you can say this is being liquidity being taken on both the buy side and the sell side. So buyers are looking to get into the markets when they see this happen, and sellers are looking to get into the markets whenever they see price under a level of support the first time with no direction. That's the only difference. The reason why we sell the second time is because the liquidity is already taken out and we can go ahead and finish off the move. Once all the money is being grabbed, price is going to continue to go further down because whenever you're looking at price and looking at supports and resistances, these are levels that take money to get out of these levels. So it takes let's just say 5 million to get above this barrier. It's going to take 5 million to get above this barrier. So what price is going to do is it's going to grab more money and then break through it. That's all price is doing, grabbing more money. It might come to this point with 2 million, but to get through this zone, it costs 5 million. So it's going to go back, grab more money to continue and progress higher up. And then it will go to the next level, and this one might be 10 million. And it's like, well, I need to go back and get 10 million more so we can press higher. And normally, think about it like this. Normally, when price is going to get all this money, it still takes a lot to even break these zones. So when price is stuck on one trend on a higher time frame, you can kind of rock out with that more because price is it takes money to break through levels. It's not just easy as you think. I know most people think about just candles, but it costs money to break through zones. So that's why you don't see price kind of doing whatever it wants. It kind of stays in the same structure and always follows the rules. So as we progress, price is grabbing liquidity and taking everybody out of the markets on both the buy side and the sell side. So we end up not trading this, anything within here. We're not trading this. We're looking to trade everything below this level because we know price is bearish now. So as price is selling off, we don't sell until price is under this level again. And we're targeting this green dot and this green dot. We target that dot and it gets taken out. And now we hit both our target price. Right. And furthermore, so then we continue to sell. So our next swing low level, which is what I like to use, the swing lows. Let's do it out the way. Whenever I am trading, I use the swing lows whenever it comes to targeting price, looking for supports, looking for resistances. I use swing highs and swing lows. So we take this, drag it across, and we can see that price went from here. We could have took sales under this level because we know price is bearish under 1, 2 levels of support, and this one as well if we want. And we can see that price is pretty bearish, and continuing down, we can target this new level here, right? And we don't need to wait for the indication on this certain move because we already have 1, 2 confirmations of price being bearish, and we have this next low. So we already knew which way price was going to go. There's certain examples that I'm going to explain furthermore in ICCV2. I'm going to explain certain more where you don't have to wait for an indication and correction due to the fact that we already have multiple confirmations that price is bearish. I do want to explain that furthermore in the teachings, but let's go ahead and get into the rest of this. So here we have price under this level causing a new low. So this is bearish on our behalf. So we can go ahead and put bearish here, and let's make this black. We can put bearish here. Price is super bearish under this level. So we're going to target this low and we're going to take note of it. We're not going to forget any lows that we made. We're going to focus on everything that price is doing. So price makes a new low. What is price going to do afterwards? Grab liquidity and cause buyers to get into the market just for it to sell back under this level again, where we can take sales and our positions could look like this. If we want, our positions can be above the stop, the highs, targeting here. However the case might be. Once again, this is the 12-hour time frame. So your stop loss probably would have been something smaller than this, way smaller than this on a smaller time frame. So you probably wouldn't even had it like this. But see here, from here to here would have been a 500-point move just based off of price making that new low under this level of support. So that was 500 points. That could have been 500, 5,000, 50,000, whatever the case might be. All that changes is your lot size. So as we start seeing price progress, it causes new lows in the market, which we're also going to focus on. So as we can see here, it's getting to a point where it's like, okay, I can see that price is getting super bearish. And most people probably have questions like, where do I target? But price is telling you where to target when it makes its moves. Every move is done for a reason. Price is most likely speaking to you and telling you, hey, I'm doing this. So price was telling us under this level of support that it was going to fall and be bearish to this level. To a certain level, it'll stop and then start to correct itself. So back under this level, we can already expect price to do the same movement back to this level. Even if it didn't continue down, we know that price is going to go from here to here. So under this level, we can see price come from here to here. And then it causes a new low, which causes another liquidity grab, another correction in the market. And then we can see price back under this level again. So as we can see from this era all the way down, we can see that price did the same exact thing. It corrected, one candle corrected, couple candles consolidating up here, and then back again, we're under this level and start to fall back down to here within a new low. Even if the low seems small to you, it matters a lot, especially closed candles. Pay attention to those because those are really important and you really, really, really need to focus on those things. So as we can see here, we have price sailed down to this level of support, push all the way back up to grab as much liquidity as possible so it can continue down later on. This will psych out a lot of people thinking the trend is changing and going back to buys. But whenever a new low is being made and it ends off like this, where you see a new low ended off, price will most likely be back for that. Price is coming back for that. It will just continue to trick people and get people to think a different thing. So most people would have thought that 1, 2, 3, it was like 2 weeks of buying, 2 weeks of buying here, and people would have thought the buy trend is back. But then price tricks them out and then continues back under here, which we know we can sell back under here. And with that new low, instead of targeting here and here, we can target this now. We can target that last new low. So when things like that happen, where price makes a new low and then it comes all the way up and it comes back under the level that you know price is going to sell to, you don't have to look for this TP or this CP. You can target that last low that was made. So this is normally how I've turned my day trades into swing trades too as well. Here we can see that price sold under the same level all the way back down to this level. So normally you would take it from here instead of taking it to here, so here to here, you can take it here all the way back down to these lows. And we're going to stretch this out, but we can continue to see that price is getting more bearish and breaking lows. And as we can see, price is still selling, still making new lows, still correcting itself. And most people will be like, well, where's my entries? Or where? The question about entries is It's pretty self-explanatory. If you know price is going to sell under a level, then you can easily make that money because you know it's going to sell under this level to this level. So entries shouldn't even be a question for certain people because it's like get in when price is under these levels that you know price is going to sell. In this predicament right here, we would get in on positions where we know price is going to sell under this level of support. So there's no question about it. Do I get in for a sell? You should ask yourself, is price under or above a level? If it's under a level and you see multiple confirmations of price being bearish, then most likely take that sell. And vice versa. If I see price is trending upwards and it's breaking highs and it's above a resistance, then most likely I'm going to take those buys. So as we have here, price ends up having this level of support, pulling back. It's cool. We probably would have not traded in this zone anyways, but if we did, we would have traded based off of price reacting here and probably taking a sell back down to here. But I highly doubt we would have took something like that. So as we see here, price ends up making a new low, correcting itself, coming back down to this target level, still trying to make new lows under this level of support, which is cool. Price is still bearish. Nothing here is screaming bullish just quite yet. So then we have a correction back up into the zone, and we're like, okay, price is respecting it. We can also take, based off of this, we can also take um sales based off of here too as well. So later on into the lessons, I'm definitely going to go over the fact that price can be retested and how to get in off a retest. So we would have broke it down from inside on a smaller time frame, but you can also get in for retests as well. And we start to see price make new lows in the market. And as we have new lows, price ends up correcting and going on this uptrend. Now it did go on this uptrend, but what did I say? When price makes something new, a new low, and it leaves, so it makes a new low and just leaves, price will be back for that. Price will be back for that new low. So just think of everything it cannot go unmitigated. And mitigated is basically saying it can't go without equaling things out, settling things out. So this is an unsettled low. So let's make this a new terminology for ICC because I've never said it that way. So let's just say this is an unsettled low. So this is an unsettled low, and price is coming back for this unsettled low. And price ends up correcting itself, grabbing as much liquidity into the market as it can. All this would be the correction, but this is also a trend. So on the 12-hour time frame, remember on the 1 hour that we trade on the most, this would have been a trend for us, an uptrend, and we could have targeted this the same way. But let's focus on this downtrend that we've been on a daily. We see price correct itself, grabbing as much liquidity as possible. And then we start seeing price progress under these low levels again. And we're going to target that unsettled low once price is under these bearish levels once again, giving us confirmation. So I can see price starts to sell here, makes a low, pulls back. So we could have took sales just based off of this pullback, retest, and failed to make a new low. And we could have took sales right back below here, having our stop loss above this high level because price made a lower high and then sold under here. So we could have took sales all the way back to this unsettled low. And then here again, we have price. And this is what we call settled lows as well. So these are all equal lows. And price will most likely not be back for these lows. Once price equals out, so these are all equal lows. Once price equals out, this is also just price being mitigated. Yo, I can't spell right now. Yeah, I cannot spell right now. So my grade at you get what I'm saying. So yo, I can't spell right now. It's crazy. So all these are all mitigated and price will no longer be back for these lows. Since price is all equaled out, it will not be back for these lows. So then we'll start to focus on the fact that price makes a new low. It did correct itself, sold back under here, and didn't make a new low. So what you need to do whenever price makes equal lows or equal highs, what you need to do is then go in and mark up the opposite direction of that. So if price marks up an equal low or equal high, if price makes one of the two, if in this scenario, price made equal lows, so you would go and find the highest point that it made. And the reason is because whenever price makes equal lows, that means it's not selling. And price is like a wild goose or a wild dog or something. It's trying to find somewhere to go to. So if it's not going lower, then it's going to look to go higher since it can't go lower. So here we have price making new high levels above here, and we start seeing price make highs of here and more highs. And it's staying above this level, and this is day tradable too as well, just above here. And then we can see price makes a high, corrects itself, makes new highs. And as we can see here, price is still continuing to make highs before it starts correcting itself. And then it pushes back down once again, causing price to make another set of equal lows. And then we start to see price come back above here. So in between this area, I would say definitely not to be trading in between this area because price just kept making lows under here. But we could see price was making more high levels above this level. So what we will do now is we will be taking buys back above this level. Once we see that price is not going lower, we have multiple entries also as well on the other days that we did trade. These were probably small day trades that you would have caught. But here we can start to see price pushing up, starting some kind of uptrend. And as we start seeing that progress, we would have been like, okay, price is going on this trend and we're starting this now. So as we start doing that, we start marking up our charts, focusing on price. We see price make new highs, correct itself. And once again, we'll go over the retest version of everything, but price retest is in this level. And we could have took buy entries back above this level once again, targeting our new highs that we do have. So as we start to see price continue, since we don't have really too much of a direction here, and how I was saying we don't need to always enter off the indication if we have multiple bullish or bearish confirmations, then this is how you would go about it. So if I have two new highs here, price is retested, and then it finds a level of support for itself, what I can do is get on a smaller time frame and break it down from here, and then we can take the buys up, and anything above here, we would target the next high. So everything else above this resistance level, we would target the next high because that is where price is most likely going to. So as we have here, boom, price will be targeting this new high because whenever price is buying and price is breaking a level of resistance, so this is enough bullish confirmation for me to take the trade here without the indication because I know price is going to start heading towards the next high level if it's breaking above a resistance. Remember, these zones cost money to break through. So it's not just going to break through and then sell off. If it breaks a resistance, it's most likely buying to the next zone and price moves from zone to zone. So here we have the next zone where we have this high and price is going to start traveling this way there. And there's multiple ways that you can also enter. Remember, we're on a 12-hour time frame. So the candles are a little bit smaller than what was going on. But over time, we can see that price is trending upwards and we have multiple high levels. So this actually is here, multiple high levels being created and price is still trending up. And as we can see, price is still doing the same thing over and over and over, making new highs, correcting itself, continuing to finish off the pattern, correct itself, and then continue to go up higher. So then we have this new high, which happened to also be all the way targeting this level as well. So if we took this and stretched it all the way here, right? We stretched it all the way here. We have multiple bullish confirmations off of NASDAQ above this buy level. So above this level, we knew price was going to be able to buy a little bit higher. We just needed more confirmation, which came from price making this high level, correcting itself, and then back above here. We knew the next zone was going to be here, and then the next zone was going to be the highest point that we had in the market. So if you have any questions, I will leave some links down below. Check them out. Join the Discord for free. But if you have any questions, leave comments down below, or if you have anything to input, definitely leave it down below. I use sessions for looking at my sessions because I trade in sessions. So I trade in New York, 9 a.m. every single day. I trade that. And then pivot points, highs and lows to help you with your highs and lows, which you probably won't need. You can also use this one too as well. So pivot point, high and low. So you can use this one, which marks it up number wise for you. But like I said, just get in a habit of doing it without it. Normally when I mark up swing highs or swing lows, it's pretty easy because I can kind of spot it out super fast that, oh, this is the highest point, this is the heels and dips is kind of how I look at it. But once again, if you have any questions, please comment down below. I'll also do one-on-ones if you're looking to get one-on-one. I'll also leave that link down below. I live stream every single day at 9 a.m. EST. I live trade every single day. And yeah, I do most of my calls in Discord and YouTube. So thank you for watching.